Listen to me very carefully because the mainstream media is absolutely refusing to cover what happened in the overnight lending markets yesterday. While everyone is distracted by the oil crisis and political noise in Washington, the Federal Reserve quietly triggered a mechanism that we haven't seen used since the darkest days of 2008. I'm talking about a sudden, unexplained spike in the discount window, borrowing coupled with a freeze in the repo market. You might be sitting there thinking your banking app looks normal, your debit card is working, and everything is fine. But that is exactly what the people in Cyprus thought the night before their accounts were locked. That is what the people in Lebanon thought. The financial system doesn't scream before it breaks, it whispers. And right now, the Federal Reserve is whispering that the liquidity is gone. They are signaling that the banks are dry. If you understand how the plumbing of the U.S. financial system works, you know that when the interbank lending freezes, when banks stop trusting each other with overnight cash, it is the final warning bell before they stop trusting you with your own money. You need to understand that the money you see on your screen when you log into your bank account does not actually exist. It is an illusion. It is a digital credit, IOU. In 2026, the fractional reserve banking system has been stretched to a breaking point that defies mathematics. For every dollar you think you have in savings, the bank has likely lent out 99 cents of it into long-term bonds that are now worthless. Remember the crash of 2023? That was a tremor. What we are facing now is the earthquake. The banks are sitting on trillions of dollars of unrealized losses. This means they bought government debt when interest rates were low, and now that rates have skyrocketed to fight this new wave of inflation, those bonds have collapsed in value. Technically, almost every major regional bank in the United States is insolvent right now. They are zombie banks, walking dead, kept alive only by the Fed printing money behind the scenes. But yesterday's signal tells us the Fed is about to pull the life support. Let's dig deeper into why this is happening right now, in January 2026. It's the commercial real estate sector. Look around your city. How many office buildings are half empty? How many commercial spaces are for lease? This is the anchor dragging the entire U.S. banking system to the bottom of the ocean. Small and mid-sized banks hold nearly 70% of all commercial real estate loans. These loans are coming due right now, this month, and the property owners cannot pay. They can't refinance because rates are too high, and they can't sell because no one wants to buy empty office towers. When these borrowers default, and they are defaulting in waves as we speak, the banks holding the paper are going to be wiped out overnight. This isn't a theory, it is simple accounting. The Fed knows this. The Treasury knows this. And they know they cannot bail out everyone this time because printing that much money would send inflation to 20% or 30%. So, what is their only option? Freezing the system. Most Americans have no idea that the laws regarding bank failures changed over a decade ago. You need to Google Dodd-Frank Title II and read the fine print. In the past, the government did bailouts, using taxpayer money to save banks. But the new laws allow for bail-ins. This means that when a bank fails, they don't look to the taxpayers. They look to the unsecured creditors to recapitalize the bank. And guess who the unsecured creditor is? You. When you deposit money in a bank, legally, it is no longer your money. You have loaned it to the bank. If they go bankrupt, your deposit can be converted into bank stock in a failed bank that is worth zero. This is the Cyprus model. They locked the doors on Friday, and by Monday morning, your savings account has been forcibly converted into worthless equity to save the institution. This is the legal framework that is already in place, waiting for the trigger event. But I'm FDIC insured. I hear this in the comments all the time. Let's shatter this myth right now. The Federal Deposit Insurance Corporation has a deposit insurance fund. Do you know how much is in it? A little over $100 billion. Do you know how much insured deposits exist in the U.S. banking system? Trillions. The ratio is less than 1.5%. If one or two major banks go down, just one or two, the FDIC fund is completely wiped out. It is mathematically impossible for them to cover everyone. In a systemic crisis, which is what the Fed's signals are pointing to, the FDIC insurance is just a sticker on the window. It is a psychological pacifier to keep you from running to the bank. If everyone tries to claim their insurance at once, the system simply shuts down. They will declare a bank holiday. That sounds nice, doesn't it? A holiday. It means the ATMs stop working, the apps go offline, and you cannot buy food or gas. Think about how dependent you have become on digital transactions. In 2026, cash usage is at an all-time low, and that is exactly where they want you. Every time you swipe your card, you are asking for permission to spend your own money. When a bank freeze happens, it won't be like the Great Depression with lines around the block, because there won't be any tellers to talk to. It will be a digital blackout. You will get an error message, system maintenance, or transaction declined. We are already seeing glitches across major banks this week. Are they really glitches, or are they testing the kill switch? By forcing you into a cashless ecosystem, they have built a digital prison. When the liquidity crisis hits, they don't need to send police to guard the bank vaults. They just need to write a few lines of code to limit your daily withdrawals to $50 or $100. We have been warning about Executive Order 14067 for years, and now we are seeing the endgame. This order laid the groundwork for the central bank digital currency, CBDC. Why is this relevant to a bank freeze? Because the solution they will offer you when the banks collapse is the Fed's new digital coin. They will say, the traditional banks have failed, but don't worry. You can access your funds if you convert them to our new digital dollar. But this money will be programmable. They can control where you spend it, when you spend it, and if you can spend it at all. A bank freeze is the perfect crisis needed to force the population to accept a CBDC. They need you desperate. They need you broke. They need you begging for a solution. And that solution will be total financial surveillance. You have to look outside the US to see the full picture. The BRICS nations, Brazil, Russia, India, China, South Africa, and their new partners, have stopped buying US debt. For decades, America could print money because the world bought our bonds. That party is over. With the Saudis now selling oil and other currencies, the demand for US treasuries has collapsed. This means the US government has no one to sell its debt to except the Federal Reserve. This creates a doom loop. The more the Fed prints to buy the debt, the more the dollar loses value. The more the dollar loses value, the faster foreign nations dump their holdings. This external pressure is crushing the internal banking system. The Fed is cornered. They have to choose between saving the dollar or saving the banks. History tells us they will sacrifice the currency. But first, they will freeze the banks to stop the bleeding. One of the most terrifying technical indicators flashing red right now is the velocity of money. Usually, when money moves fast, it signals a booming economy. But right now, we are seeing a strange phenomenon. Money is moving fast out of the system. Smart money, the billionaires, the hedge funds, the corporate treasurers, they are quietly moving their capital out of regional banks and into too big to fail banks or hard assets. They are engaging in capital flight within our own borders. When the smart money leaves, the bank is left with the deposits of the average Joe. And when the collapse happens, the average Joe is the bag holder. The velocity of withdrawals is accelerating, and the bank's liquidity ratios are plummeting below the legal limits. They are hiding this with accounting tricks, but they can't hide it forever. If you thought the housing market was a bubble, wait until you hear about the derivatives market. U.S. banks are exposed to hundreds of trillions of dollars in derivatives. Bets on bets on bets. These are complex financial contracts based on interest rates, currency fluctuations, and stock prices. With the volatility we are seeing in 2026, with oil prices swinging wilding and geopolitical war risks, these derivative contracts are becoming toxic. A small move in interest rates can trigger a margin call that wipes out a bank's entire capital reserve. This is the black swan that nobody is talking about. It only takes one major counterparty to fail, like a large hedge fund or a foreign bank, to trigger a chain reaction that freezes the entire U.S. banking network instantly. Don't listen to what the CEOs say on CNBC. Watch what they do with their own wallets. In the last 3 months, insider selling among bank executives has hit record levels. Why are the CEOs of these major financial institutions selling their own stock? Why is Warren Buffett sitting on a record pile of cash and selling bank stocks? Because they see the balance sheets. They see the rot inside the system. They are cashing out at the top while telling you to buy the dip. This is the ultimate betrayal. They are securing their lifeboats while drilling holes in the ship that you are sailing on. When the people running the system are exiting the system, you better run, not walk, to the exit. The biggest enemy you face right now is not the Federal Reserve. It is your own mind. It is called normalcy bias. It is the refusal to believe that a disaster can happen because it hasn't happened to you before. You think, this is America, banks don't just close. But they do. It happened in the 1930s. It happened in the 1980s S&L crisis. It happened in 2008. And the math says it is guaranteed to happen again, but on a much larger scale. The system relies on your confidence. As long as you remain calm, they can keep the game going. But the moment you wake up, the moment the herd gets spooked, the game ends. And my goal with this video is to wake you up before the herd tramples you. You cannot afford to be optimistic right now. You need to be paranoid. Have you noticed that the biggest bank failures always happen on a Friday evening? Silicon Valley Bank, Signature Bank, they were seized by regulators after the markets closed on Friday. Why? Because it gives the government 48 hours over the weekend to try and stitch things together before the Asian markets open on Sunday night. Today is Saturday. If a major freeze is coming, it will likely be announced or leaked in the coming hours or days. The Fed operates in the shadows during the weekend. If you have money sitting in a vulnerable bank right now, you're literally gambling that the system holds together until Monday morning. That is a risk I am not willing to take, and neither should you. Even if they don't freeze your account, they are stealing from you. If the Fed decides to print their way out of this crisis to prevent a total collapse, your savings will be devalued by 20%, 30%, or 50%. We are already seeing the price of groceries and energy skyrocket. This is not an accident, it is policy. Inflation is a hidden tax. It is a default on the currency. If you leave $10,000 in the bank and inflation hits 20%, you only have $8,000 of purchasing power left at the end of the year. You are losing money every single second it sits in fiat currency. The bank pays you 0.5% interest while inflation eats 10%. You are being robbed in slow motion, and a bank freeze is just the final act of this robbery. Some of you think the government wouldn't go so far as to seize assets. Let me remind you of Executive Order 6102 in 1933. President Roosevelt made it illegal for U.S. citizens to own gold. He forced everyone to turn in their gold to the Federal Reserve in exchange for paper money. Then, once they had the gold, they devalued the paper money. The government has a history of changing the rules when they are desperate. In 2026, they might not confiscate gold, but they could confiscate or freeze 400 Owinke's in retirement accounts to protect the bond market. They will call it national security. They will say it's for your own good. Do not underestimate what a bankrupt government will do to stay in power. So, what do? Step 1 is immediate. You need to have physical cash on hand. I'm not talking about a few $100s. I'm talking about enough cash to pay for 1 to 3 months of expenses. Food, fuel, rent. If the digital grid goes down or the banks freeze, cash will be king for a short window of time. While everyone else is staring at their declined credit cards, you will be able to buy what you need. Get it in small denominations, 10s, 20s. People won't have change for a $100 bill in a crisis. This is your insurance policy against a digital lockout. Go to the ATM today. If the limit allows, take it out. If the bank asks why, tell them you're buying a used car. It's none of their business. Step 2 is moving out of the system entirely. You need real assets, physical gold and silver. These are the only financial assets that are not someone else's liability. Gold has no counterparty risk. If the bank fails, your gold is still gold. If the dollar goes to zero, your silver is still silver. In fact, in a currency collapse, these metals will skyrocket in value. We are already seeing central banks around the world buying gold at record paces. Do what they do, not what they say. Allocate a portion of your savings into physical metals that you hold in your possession. Not paper gold or ETFs. Those can be frozen too. If you can't hold it, you don't own it. For those who are tech savvy, Bitcoin offers a lifeboat, but only if you understand self-custody. Leaving Bitcoin on an exchange like Coinbase is just as dangerous as leaving money in a bank. If the exchange freezes, you lose. But if you hold your own keys on a hardware wallet, you become your own bank. You can transport your wealth anywhere in the world without permission. In a world of capital controls and bank freezes, a censorship-resistant money like Bitcoin is a powerful tool. But be warned, the government will try to restrict the on-ramps and off-ramps. You need to learn how to use it now before the panic starts. Finally, understand that a banking crisis becomes a supply chain crisis instantly. Truckers don't drive if they can't use their fuel cards. Stores don't restock if they can't pay their suppliers. A bank freeze means empty shelves within 72 hours. You need to be your own grocery store. Do you have 2 weeks of food? Do you have water? Do you have medications? This isn't about being a doomsday prepper. It is about being a responsible adult. If the credit system pauses, the movement of goods pauses. You need to be prepared to weather the storm without needing to go to the store. I am telling you this because I want you to be safe. I want you to prosper when the rest of the world is panicking. The signs are there, the Fed's emergency signals, the insider selling, the commercial real estate collapse. It is a perfect storm. We are standing on the edge of a precipice. You have a very small window of opportunity to secure your wealth. Do not wait for the news to announce the crisis. By then, the doors will already be locked. Take action today. Look at your finances, diversify your holdings, get some cash, and get prepared. The system is blinking red. Are you watching?